credit memo is an indication or a document from a vendor to a customer showing that the vendor overbilled the customer in some manner. Maybe the vendor didn't provide all the goods they meant to provide, or the goods were damaged. And the purpose is that they will credit the customer's account so they can apply that discount on the next invoice we send them. So we don't give them a cash refund. We just say you have $100 or whatever credit on your account, and we'll apply it to the next invoice. So the way this works is if I set up two companies on Gravy Books. So on this black company, we'll do the cleaning pros. And on this white side, we'll do Brighton Supply. And let's say the cleaning pros come and clean, and they issue an invoice for their cleaning service to their customer, Brighton Supply. We'll skip over these fields that don't matter for now, and we're just going to do a cleaning service here. Into our sales account, and we bill them for $120, and we create that invoice and we send it to them. So the Brighton Supply receives this invoice number 1 for $120. So let's go to our bills, create a bill, free form from the cleaning pros, and this is bill number 1, and this is cleaning for $120, and we'll do cleaning expenses GL, create that bill. And let's say we go to AP and just pay this bill because we trust this vendor, and pay out of our bank account, and we pay the entire balance. Let's just say debit card payment method, and we realize after paying them that they forgot to clean one of the rooms in our building, so we had to clean it ourselves. And in all fairness, they didn't do the $120 of work. So we let them know, and they say, "Oh yeah, we sent a new guy, and he didn't know about that room. So we're going to issue you a memo." They would, first they would receive the payment. So let's do that. So we received the payment from Brighton Supply into our bank account, and they paid this, post the payment. So AP is empty, AR is empty, and we realized that on that past payment, the work wasn't up to snuff. So if I go to my credit memos, and I can create a credit memo for Brighton Supply, and we're going to debit our cleaning income, our sales income here, and $20. And we will create that and send this to Brighton Supply. Like, this is an official memo that we have a $20 balance here. So on Brighton Supply's AP side, we will document that as a vendor credit. So from the cleaning pros, we have credit number 1, new guy forgot a room, and we are going to reduce the amount of expenses and create that vendor credit memo. So now on the cleaning side, when we issue our next invoice for cleaning again, and the new guy does all the rooms this time. We now have that in AR. On this side, we enter the bill we received from the cleaning pros, and it is this is bill number 2 coming through for cleaning for $120, and we create that bill. Now when we go to pay that bill, we can create a new payment for the cleaning pros, and when we add this bill as intending to pay it, we get the option to add the vendor credit, which in this case is $20. We'll apply that vendor credit, and we'll only pay them $100 cash. So we apply our discount. When we pay that and we send them the remittance advice, they see payment number 2. We have vendor credits applied, and on invoice number 2, the credit number 1 was applied for $20. So on the cleaner side, in their AR, they can say, okay, let's enter that payment from Brighton Supply. They paid this invoice and they applied a memo. And since there's only one memo on the books, it just auto applies it, and we can see that this structure follows the remittance advice. So memo 1 is applied to invoice 2 for $20, and then $100 of cash. And we post that payment. We have nothing in our AP. If we go to our credit memos, we see we have a $20 memo with 0 remaining on it. And then on this side, if we go to our AP and look at our credits, we have $20 credit and zero remaining. So from the customer side and the vendor side, that is how your credit memos work in accounting software.